Good day, everyone. Welcome to another video lecture for income taxation. I am your instructor, Ms. Jazelmay Celarinos Del Monte. Now, our topic for this video is all about taxation of estate and trust. Now, first, let's have an understanding of the different basic terms in relation to the topic. We have the estate or inheritance, taxable estate, trusts, taxable trusts, trustor or grantor, beneficiary, and fiduciary. Now, what do you mean by estate or inheritance? This refers to all the properties, rights, and obligations of a person which are not extinguished by his death, and also those which have accrued thereto since the opening of the succession. Now, in Filipino or sa Bisaya pa, when say estate or inheritance, these are the what we call pamana. So, mo ni siya ang pamana of those deceased person to his or her beneficiaries or his or her successor. Taxable estate. So, when you say estate class, of course that those are the inheritance of the deceased person. Now, whatever the income generated by the estate, okay, before or prior to its transfer or prior to its succession to the successor, such income or such income of the estate will be considered as taxable income, or will be considered as taxable estate, meaning the income will be subject to tax. Now, when will this income of the estate be subject to tax? Now, an estate is an income taxpayer if under judicial settlement or administration, meaning there the management of the income earned by the estate is under a judicial settlement, or there is administration, meaning there is another or a third party handling or managing the estate prior to its transfer. Okay, transfer to its successor. Okay, so meaning na ay naga-manage pa, na ay take over, na ay naga-care over sa tanang mga income generated by the estate before daw siya mapasa sa mga successor. So, kato siya. Take note, it is taxable or it is an income taxpayer. The estate is considered as an income taxpayer if it is under a judicial settlement. Unsa man di ay other nga way of settling the estate. Napunta ginatawag nga extra judicial, meaning agreement na siya between the concerned person, meaning wala na yung third party nga nag-take over. Kumbaga, diretso na ang mga successors, ang mga hingtungdan sa deceased person, sila na mismo ang nag-decide kung kinsa asa padulong ang katong mga estate. Next is trusts. Trust means an agreement created by will or an agreement under which title to property is passed to another for conservation or investment with the income therefrom and ultimately the corpus or principal to be distributed in accordance with the directives of the creator as expressed in governing instrument. So again, when you say trust, kani daw siya, mura siya og fund that is created by what we call the trustor or the creator to a certain party for conservation or investment purposes. So, gi-create na siya nga fund para i-conserve kay after the purpose have been satisfied with this particular fund, such fund will be such fund, including the income of that fund, will be distributed in accordance with the will of the creator. Best example for this one, class, is kanang mga trust fund gani para sa mga minors. If ang isa ka parent is nag-create siya karon og trust fund para sa iyahang mga anak ng mga minors, that will be used iniga magpagdako na nila. So, kato siya nga fund, gi-entrust to siya sa isa ka administrator. sa isa ka third party kay para sila ang mag-manage, and the creator let the third party invest the fund kay para magtubo siya og income. Okay? So kato siya nga trust fund is para to siya sa isa ka particular beneficiary. So that is trust. Now, the same with estate, trust can also be taxable. So, ang income, take note ha, it is not the estate and the trust ang ato ang taksan, but rather the income earned by the estate and the trust. Now, kanus aman mataxable ang isa ka trust. To be taxable, it must be irrevocable. So, para daw taxable ang income sa trust, kailangan daw ang entitlement sa trust is irrevocable. Okay? When say irrevocable, that means to say, dili na siya ma-change. Okay? Meaning, di na siya ma-revoke. If that person is assigned, dili na siya mawala sa iyahang assignment. Next, we also have trustor or grantor. This is the person who establishes the trust. So, sila to nag-create. Sila to ang nag-enter into the agreement to a certain third party. Beneficiary, it is the person whose benefit the trust has been created. So sila to makadawat sa income and principal sa trust. A beneficiary has equitable title to the property transferred to the trust, including generally the possession and use of the property. Fiduciary, this is a general term which applies to all the persons or corporations that occupy positions of peculiar confidence towards others, such as trustees, executors, guardians, or administrators. So sila to, fiduciary is the general term nga gi-assignan to manage what we call the estate or the trusts. For estate, we have executors, okay, and or administrators. For trust, we call them as trustees. So sila to pamahala sa katong mga properties before it will be transferred to the ultimate beneficiary. So let's have the essential knowledge for this taxation of estate and trust. Now, for taxable estates and trust, this will be taxed in the same manner and on the same basis as in the case of individual. So, same sila na ay gross income, and then they will also be entitled with business income. Okay, nagyapon sila yung mga business income. And then, they will also be taxed using graduated tax rate or preferential tax rate. Same case as the individual. Now, allowable deductions for the estate and trust. So, first is amount distributed to beneficiaries. Na aside sa katong business income, aside sa katong mga itemized, not business income, but rather business expenses, aside sa katong mga itemized expenses of the trust and estate, another allowable deduction is the amount distributed to the beneficiary. Now, if in a certain period na ay portion sa income earned by the estate or trust nga gidistribute sa beneficiary, that amount distributed to the beneficiary can be claimed as deduction of the estate and trust. Now, another amount collected by the guardians to be held or distributed as the court may directed. So, pwede tong amount, okay, deductible po tong amount nga gihatag sa mga fiduciary. Okay, kung pila tong gihatag sa sa fiduciary as allowed by the court. Now, the amount allowed shall be deducted or shall be included in computing the taxable income of the beneficiary, whether distributed to them or not. Now, since on the part of the beneficiary, nakadawat sila og income or nakadawat sila og distribution from the income of the estate and trust, on the part of the beneficiary, income to sila. Okay? So, since income na siya, that will be included in the taxable income of the individual beneficiary. So, kumbaga, lahi ang ang taxation sa estate and trust, lahi pud ang taxation sa beneficiary, and the taxation for the beneficiary is as the usual income or the individual taxation. Now, income of a trust will be taxed to, okay, for a trust class, a trust can only be taxable when, okay, ang trustor is, if revocable siya, the trust or the income of the trust will be taxable to the trustor. Okay, meaning katong nag-create, pag revocable siya. Pero pag irrevocable siya, then ang income of the trust will be computed separately. So, mo na to siyang naatay taxable trust. Dituan na to siya sa trustee. Pero pag revocable siya, tanang income sa trust will form part on the taxable income of the trustor. So, appeal siya dito. Pero kung irrevocable siya, then there will be a separate taxable income for the trust. Now, estate as a taxpayer. Again, taxable ang estate if it is settled under judicial settlement or administration. Then, for trust to be a taxpayer, kailangan irrevocable siya. Okay? Irrevocable ang designation. Or a trust is a taxpayer if under the terms of the trust, the fiduciary must accumulate the income. And a trust is a taxpayer if under the terms of the trust, the fiduciary may accumulate or distribute the income in his discretion. Meaning, irrevocable siya. Ang right karon is naa sa trustee. Okay? So, naay right, naay katungod si trustee nga siya ang magbuot on saan niya pag-manage ang trust, meaning that is considered as irrevocable designation on the part of the trustee, and therefore the trust is a separate taxpayer. When is the income of the trust taxable to the grantor? Okay, grantor or the trustor, that is when revocable. Okay, kung ang kaning letter B, si trust ang taxpayer if the designation of the trustee is irrevocable. Pero pag revocable siya, the income of the trust will be taxable to the grantor or the trustor. Or, if under the term of the trust, the title to any part of the corpus or principal of the trust may be revested to the grantor, meaning mabalik siya sa grantor, the income of the part of the corpus or principal shall be taxable to the grantor. Now, if under the term of the trust, the income of the trust shall be applied for the benefit of the grantor, the income that shall be applied for the benefit of the grantor shall be taxable to the grantor. Okay, in short, tanang mga principal, tanang mga income nga ma-generate sa trust is mubalik siya sa grantor. Then, the income of the trust will be taxable to the grantor or the trustor. Treatment of income distribution of the year's income to heir or beneficiary. So, what will happen daw sa katong portion sa income earned by the estate or the trust na gi-distribute sa heirs or sa beneficiary. So, first is of course, that is an income of the heir or the beneficiary, so it will form part on their respective individual taxation or individual taxable income. On the part of the estate and the trust, it can be claimed as deduction. Okay? Deduction siya on the part of the estate or trust, and then income siya sa part sa heir or sa beneficiary. Computation of taxable income of the estate or trust. The same with the individual. You'll have the gross income less the deductions such as business expenses, and then distribution of the year's income to the heir or the beneficiary. That is equal to the taxable income. And taxable income tax due will be based on the graduated income tax rate or the preferential tax rate. Now, several trusts with common grantor and common beneficiary. Now, in this case, there are more than one type of trust. Okay, so dili lang kay isa ang gi-create ni trustor, but two or more trust are being created. So unsay dapat buhaton if daghan several trust were created with common, okay, isa lang ka trustor and isa lang pod ka beneficiary. Now, for the filing of separate returns, a separate return will have to be filed for each trust by the respective trustee or fiduciary. So, isa-isa siya pag or separate siya pag file sa iyahang tax return. Now, aside from that, the separate returns filed by the different fiduciaries shall be consolidated. Okay? So, after filing a separate return, then naapod siya consolidated nga they shall be consolidated in the BIR allowing against the consolidated taxable income one exemption only of 50,000. Now this one, dili na ni siya applicable ni 50,000 because under the chain law, wala naman tay allowable deduction nga 50,000. So I think di na ni siya allowed ng 50,000. So, i-disregard na lang nato. But still, kailangan siya na ay consolidated. Okay? Consolidated return for the trusts or for the several trust. Now, the income tax of the several trusts shall be computed on a consolidated income. So, meaning, isahon nimo or you just get the overall income tax due of the trusts, of the several trusts. And now, how do we know the individual or the separate tax due of each trust? So, mo na ni siya. Apportionment of the consolidated income tax to different trust. Meaning, katong consolidated income tax due sa tanang mga trust, i-allocate nimo siya or apportion nimo siya into different trust. So, kuan nimo siya, divide nimo siya into the different trust. Now, how to compute the apportionment? So, the format for the computation follows. So, kumbaga, on the total or consolidated income tax, kung lang nato tong ratio sa each trust. So, the ratio will be taxable income of the trust over taxable income of all trusts. So, mo ni siya ang ratio sa isa ka trusts. Then, tax payable of each trust. So, pila man ang bayaran sa kada trust. Each trust shall pay an income tax still due computed as follows. So, income tax apportioned to the trust less income tax already paid by the fiduciary of the trust. And that will be the income still due. So, the tax rates will be the same as the individual. So, mo ni siya, no? First 250,000, 0. Then, from 250 to 400, 20%. 20% siya. And then, 400 to 800,000, that is 30,000 plus 25% of the excess over 400,000. And then next, 800,000 and 2 million, that is tax on 130,000 plus 30% of the excess over 800,000. And 2 million to 8 million, 490,000 plus 32% of the excess over 2 million. And for over 8 million, that is 2,490,000 plus 35% of the excess over 8 million. Okay, so now let's have the illustration. Now, the estate of Mr. Injano has 800,000 gross income before business expenses of 200,000. The estate administrator distributed 300,000 to the heirs in accordance with the will of Mr. Injano. So, how much is the taxable income and tax due of the estate? So, gross income, 800,000 less the allowable deduction. So, allowable deductions includes the business expenses of the estate and the amount distributed, whether paid or not yet paid, to the heirs. So business expenses 200,000 and distribution to heirs 300,000 for a total deduction of 500,000. So taxable income is 300,000. Now this taxable income will be subject to tax, and the tax due will be based on the graduated tax table. The first 250,000 is 0, and excess of 250,000 will be taxed by 20%. So 50,000 times 20%, that is 10,000. Therefore, the tax due is 10,000. Okay, this is based on this rate. Illustration 2, Kevin designated in irrevocable trust as a property or trust a property in favor of J and appointed KJ as trustee. Okay, so ang trustor dire, ang creator is si Kevin, the beneficiary is si J, and the fiduciary or the trustee is si KJ. Take note, irrevocable trust, meaning, okay, so dili na ma-change ang assignment. So that means the trust here is considered as the taxpayer. Now, the property earned 1.5 million income before expenses of 200,000 and trust fees of 50,000. In accordance with the trust indenture, KJ distributed 100,000 to J. Okay, so pila daw ang taxable income and tax due. Now, to start with, we have the gross income of 1.5 million, less the allowable deduction, which includes the business expenses, the distribution to J, and of course, the expenses of the trust or the amount paid to that trustee as the trust fee. Okay, trust fees allowed by the court. So, expenses, 200,000. Trust fees, 50,000. Distribution to heirs, 100,000 for a total deduction of 350,000. Now, the taxable income is 1,150,000. Now, based on the table, the tax due is, for the first 800,000, we have 130,000. And excess of 800,000, that is 30%. So, total of 235,000. And again, this is based on this tax table. Okay, next illustration. Don Jose designated 3 trusts, all in favor to his son, Joe. We have Trust 1, 2, 3. Designation for Trust 1 is irrevocable. The trustee is AJ. The income is 300,000 and distribution to Joe or to the beneficiary is 30,000. For Trust number 2, designation is irrevocable while the trustee is a BJ. Income of the trust is 400,000 while the distribution is 40,000. And the last trust is Trust number 3, which is designated as revocable. Trustee is CJ. Income is 50,000 and distribution to the heir is 50,000. Now, based on the trust, okay, take note that a trust is considered as a taxpayer if there is an irrevocable designation. So, in this case, only Trust 1 and Trust 2 will be subject to tax for the trust. What will happen to Trust number 3 since this is irrevocable? Whatever the income of Trust 3 will be what? Will be included in the income taxation or the individual taxation of the trustee. Okay? Kang Don Jose. Dito niya siya ma-appeal sa income taxation ni Don Jose because this is revocable. So, Trust 1 and 2 lang. So, pila man ang tax due for the trust and for Trust 1 and 2 and each, okay, each trust. Again, based on the rule, kailangan una nato kwaon ang consolidated tax due. And whatever the consolidated tax due is, ato siyang i-apportion between the different trust on the basis of their ratio of the taxable income of each trust over the total trust or the overall trust. So first is kung saan nato ang consolidated taxable income and of course the tax due. So operating income of the two trusts, that is 700,000, 300,000 plus 400,000. Allowable deductions, we have the distribution to heirs, 30,000 and 40,000 for a total of 70,000. Now taxable income, the consolidated taxable income is 630,000. Now, based on the taxable tax table, okay, so first 400,000 will be taxed by 30,000 and the excess will be 25%. Total of 87,500. So take note, this is consolidated tax due. This is for the both Trust 1 and 2. Now, how much will be the tax due for Trust 1 and Trust 2? So, i-allocate nato siya. Okay, so the allocation or the apportionment will be as follows. For Trust 1, that is the consolidated tax due times the taxable income of Trust 1, that is 270,000. That is computed as 300,000 nga income of the trust minus the distribution, so 270,000 over the total taxable income, 630,000. So the apportionment is 37,500. For Trust 2, the taxable income of Trust 2 is 360,000. That is 400,000 nga income of the trust less 40,000 nga distribution. So this should be 40,000 less, ha? So we have 360,000 over the total taxable income nga 630,000 times the consolidated tax due 87,500. Therefore, the tax due of Trust 2 is 50,000. Okay? Again, trustee is not taxable as it is a revocable. The entire 500,000 of Trust 3, including the 50,000 income distribution, will be included in the taxable income of Don Jose. Okay? Again, we base the tax due on this tax table. So that ends our topic for this video, all about taxation of estate and trust. Now, for more understanding in relation to the topic, you may refer to these following sources. Now, thank you so much for watching. I hope that you have learned from this video. God bless you all and have a good day.